Hey warriors, I hope you're all doing well. This is your friend CA Rahul Agarwal, and I'm here with an important video for all my CA final students who are approaching the September 2025 examinations. As your exams are almost around the corner, ICA has also done its part and given you what is called as the amendments which are applicable for your September 2025 examinations, the ones which are required for you to study over and above what you have studied for your May 2025 examinations. So for all of my friends who have already gone through classes for the May batch, if you are planning to write a September exams, there are a couple of amendments which has to be kept in mind before you go forward. Today's video will be discussing all those amendments. It's not much people, we're looking at just 4 to 5 amendments, so not really critical, but yes, you have to pay attention to these amendments because for those who have done the May 25 already are aware about it. ICA is really putting a lot of weightage on the amendments which are coming in for direct access for your exams, and therefore you never know. Just by reading these 4-5 amendments, you may probably get a good set of marks for your exams. So yes, we are paying attention to it. Yes. Great. Now, let me clarify as I give this video out to you people. The first of all, that when ICA releases the statutory updates, ICA does not release statutory updates just from May to September. ICA normally releases statutory updates keeping in mind all things which were there in the August edition of the ICA's material and what is missing from there. Yes, so which means this document of ICA will technically cover all the amendments which are there right from the August 2024 edition till the September 2025 examinations applicable timelines. Now, from our perspective, we don't need to be spending so much time and going through all those things, people, because we have technically done those. So what I'll be doing is that May 2025, all relevant amendments which are there, I've already shot a video and I've put it earlier. So I will add this video additionally to that May 2025 amendment video so that you can only focus on the September amendment videos specifically. Yes. So what we're going to do is the same thing, people. We're going to look into the document and I'm going to tell you what are those topics which are relevant only for the September examinations from the May examinations. For all the May examinations, you're going to watch the May video. You're just going to add that extra addition for the September topics. Like I said, the 4 or 5 amendments we're going to be discussing. Now, before I proceed forward, let me clarify this one thing very, very clearly to you. When it comes to September examinations, the rule stands applicable as the same, which means ICA only talks about those amendments which happens until the last 6 months before the examination. And therefore, all amendments which have come in up to 28th February 2025 is what holds relevance to your September examinations. I want to make it extremely clear to all of you because there were some very, very important amendments which has been launched specifically relating to safe harbor rules and everything. But these are all amendments which have only come post February. So these are only those amendments which are going to be applicable for the Jan students. It is not going to be applicable for the September 2025, and therefore ones who are writing September 25 have less amendments as compared to what Jan 26 has. When Jan attempt comes in, we will automatically have a video for those topics as well. So right now, let's pay attention to only the fact that you're only going to be focusing on those amendments which has come in up to 28th February 2025. Are we clear? Great. On that note, people, is what we're going to look at the amendments. Let's look at the amendments. Let's see what is happening here. First, ICA has put in some amendments relating to the topics of TDS. The ICA has come and clarified that this was an amendment which was there in March 2024, not relevant. 2016, not relevant. 2024, not relevant. 2025, this is again January 25, this is what is a relevant amendment. Yes, so these are all the amendments which has been notified. So we're going to look into all these amendments. Let's understand what is happening. First of all is the applicable TDS amendments, which is there for 7th March 2024. Now, because it's 7th March 2024, it does stand relevance. The amendment comes and talks about something. Let's read the heading. It says non-applicability of TDS provisions in respect of certain payments made to units located in IFSC. I think as much as you would have gone for classes, people, one thing is fairly clear: when it comes to IFSC, almost everything is amended. Everything is not applicable. So therefore, income tax just keeps adding on to those things. As soon as they see something which is going and getting applicable for IFSC, they will launch a notification and say it is not applicable. So we're just going to read that, people. This is not going to be very critical. The very critical part which is going to come and tell you is, in accordance with section 197A, read with section 80LA of Income Tax Act, which talks about IFSC exemptions, the central government by notification has confirmed that no tax is required to be deducted at source in respect of the specified payments made by any payer to the payee being an IFSC center as specified in the following payments. So the following payments are now no more going to be liable for IFSC cases. What are the payments? If the person who is in a banking unit will not be liable for any kind of TDS happening on interest income of ECBs, professional services, any kind of a referral fee, brokerage income, commission income on factoring services, none of these is going to be liable for TDS. If you are an insurance intermediary, you'll not be liable for any insurance commission as per 194D. If you're a finance company, you're going to be not be liable for the external commercial borrowings, the same thing we saw above. Dividend income is also going to not be liable for any TDS for you right now. And then again, the factoring income. not liable for TDS. Finance units are not going to be liable for the external commercial borrowings, dividend income, factoring income. Fund management is not going to be liable for professional services. Broker deals are for dividend income, investment advisory fee, distribution fees and commission fees for distributors, any kind of professional fees, commission fees, credit rating fees, investment banker fees, tutorship fees, commission income, professional services, commission income. If you technically notice, these are bucketed into couple of things. One is for ECBs, external commercial borrowings, any kind of professional fees, commission fees, dividend income, IFSC centers receiving it, completely not liable for TDS. This is what the rules would say. I would suggest not to pay much attention to it because IFSC as such is not tested in exam so much. But if you see a weird question coming in exam which says I'm making payments to IFSC, treat it as not liable for TDS and close it off. That is how I would treat it as. Yes, that amendment number 2, which talks about any kind of applicability of 197A to interest paid by IFSC banking units. So if it is an interest paid to IFSC banking units, will TDS apply? This section is now coming and saying no tax will be required to be deducted by an offshoring banking unit from the interest paid on deposits made by a non-resident or a person who is not ordinarily resident in India, or a borrowings happening to a non-resident or a person who's not ordinarily resident in India. Again, if it's an IFSC center making a payment of interest, then it will not be liable for any TDS if it's made to a non-resident. Yes. Non-applicability of TDS on section 194C on cash withdrawals. Now, this is a case of cash withdrawal. So let's see what is happening. If you have a cash withdrawal, section 194N requires that you have to do any kind of TDS on happening of 1 crore or 3 crores. We have discussed it in the classes as well. Fifth proviso of 194N requires that central government can give special exemptions to people who will not be liable for TDS. According to this, they have given clarified saying that now no more section 194N will apply to foreign representations duly approved by the Ministry of External Affairs, including diplomatic missions, agencies of United Nations, international organizations, consulates, and officer of honorary councils, which are exempt from paying taxes in India. So if you are an entity which is anyway exempted to pay tax in India, there is no requirement for me to be deducting TDS under section 194N just because you are withdrawing money from your own bank accounts. Clear? Great. Then we have the next section which says persons notified by central government on payments to whom tax is not required to be deducted. This is happening as per notification number 1 of 2025, 2 of 2005 and 3 of 2025. This section is basically coming and saying no tax will be required to be deducted on payments made by, which are payments received by Credit Guarantee Trust for micro and small enterprises, National Credit Guarantee Trust companies, any kind of credit guarantee funds which are established only by central government. Any kind of these people will not be liable for TDS because people, you are already aware about it, these are all exempted entities under section 10. Because they're anyway exempted entities under section 10, there is no requirement for me to be deducting TDS on these kind of payments. Yes, they have been given some additional conditions that you should be furnishing some statement cum declaration for the purposes. You should have any kind of verifications done. The buyer would not be deducting TDS on payments after the date of receipt of the copy of the declarations. So you should not be deducting TDS only when the document is submitted. Until such document is submitted, you will have to continue to deduct TDS. Then, for the purpose of section TCS, people 206C1H, which talks about receipts of any goods exceeding 50 lakh rupees. If you're going to be receiving any kind of goods exceeding 50 lakh rupees, then would you be liable for TDS? They have come and clarified that if it is done by an IFSC center, then again no TCS will apply. Simple, straightforward cases. The ones which I wanted to pay attention is starting from here. TDS, not so critical. Honestly, if you come and ignore all those amendments which are given above also, it should not be a problem. The amendments which are coming from here are the most critical ones, so I wanted to pay attention here. First is a compounding of offense guideline which has been issued by income tax. Now, what used to happen, people, is that earlier when it comes to compounding of offense, they would have certain guidelines. Yes, these guidelines will come and talk about who can do a compounding and who should be the authorized person to do so. In the notification, they have made some important adjustments relating to compounding of offences, so we are looking into it. Section 279(2) provides that any offence may either before or institution of proceedings be compounded by the principal chief commissioner, principal director general or director general. Yes, this was a normal practice. These are the 4 people who were authorized to do any compounding of offences. Explanation 279 required CBDT to give orders, directions for the powers to notify these kind of compounding of offences, and therefore what has been the revised guidelines. There has been a revised circular which has been issued on 4th 2025, which is on 17th March 2025, which is giving you guidelines on how compounding of offences should take place. Before you go to the guidelines, IC has given you a big detail on what compounding of offences look like. So I'm just going to read this out for you people. If you have already done your classes, you fairly are aware about it. Yes, compounding of offences in a very simple nutshell is what is given in your study material, but for some reason IC has given a very big detailed out pages coming and explaining what compounding of offences is. So therefore, I have a gut feeling that compounding of offences can be one topic which can be tested in current attempt. These are some 4 or 5 pages which if you can pay attention to, you may probably end up scoring that 4 to 5 marks on compounding of offences, because this topic as such itself is not a very crucial topic in your study material and doesn't have much of an explanation. With this as an advent brought in, there is a big amount of explanation and amendment which ICA is trying to contemplate to you, and therefore yes, it's important that you look into this topic very seriously. So let's read it together, people. I'll try to explain it as we progress on the topics. First one, what is a compounding of offense? Compounding of offense is a mechanism whereby the defaulter is deprived of major legal consequences by affording him an opportunity to pay certain sum of money to escape prosecution. This is what we have discussed in classes also. When it comes to compounding of offense, people, if someone is prosecuting you and coming and telling that I will put you in jail and also levy fine on you, you can go and request for a compounding of offense where you can plead guilty and you can come and tell them that this is my first and the last time I'm making this mistake, and so therefore I would not like to be prosecuted. I am okay to pay you some money, not as a bribe but more as a compensation in order for you to avoid my prosecution, because this is a one-time event which has taken place. So compounding works on those levels. The specified offences can be compounded by competent authorities either before or after institution of proceedings. You can do it whenever you want. Are there any offences which are not compoundable? No. In income tax, all offences are compoundable no matter what serious the crime is. If the officer is convinced that you are not going to make this mistake again, he can always compound the offence no matter who you are. Yes, scope of guidelines to prosecution. These guidelines come into effect from the issuance of the guidelines, which is 17th October 24, and applies to all compounding applications which are filed after this date as well as the application which has already been filed. So 17th October 24 is when the circular came, and therefore the revised guidelines apply from that period. Whether revised guidelines are applicable on pending compounding applications? Yes, this has been clarified, saying all guidelines will apply even if the prosecution is level, even if the proceedings have been started before 17th October, or if it is starting after 17th October, the procedure remains the same. You will not have any old guidelines, new guidelines to refer to, just one standard guidelines you can refer into. In case applications under earlier guidelines were rejected solely on account of curable defects, the fresh applications can be filed. So if there is any minor defects which is happening in the applications because of which it got rejected earlier, you are now being given an additional open window where you can come and file a new application for prosecution compoundings. Curable defects such as non-payment of outstanding taxes, interest, penalty, or any other sum relating to offence, filing of application in incorrect performance, mention of incorrect assessment years, financial years, or section under which the offence has to be committed, non-payment or short payment of compounding charges, non-submission of undertaking regarding withdrawal of appeals, any such things can be called as a curable defect, something which is not very critical. All these things can be treated as a curable defect, which can now be used as a reference point for you to file an application once again. Any kind of applications, whether applicant whose application was rejected in earlier guidelines on the ground of being convicted is eligible to reapply or compounding as per revised guidelines. So here is a question where they're coming and telling, can a person whose application has been rejected earlier can reapply in the revised guidelines? This is a very good question which can come in exam. If something has got rejected earlier, do you have an option to file it under the revised guidelines? The answer is yes. The answer is yes. If in case the rejection was happening solely on account of conviction without examination of merits, then as per the revised guidelines, the person can be eligible to file a new revised prosecution proceedings के लिए compounding application. Conditions for consideration of compounding application. What are the offences which may be considered for compounding applications? If you are considering a compounding application, the following things to be kept in mind. First, to make a compounding application, you need to file the application. So a compounding application is to be made to the jurisdictional PCCIT, CCIT, PDGIT, DGIT for the competent authorities for compounding of offences. So 4 people who are there. It is Principal Chief Commissioner, Director General, and Principal Director General. 4 people who are eligible to do any compounding of offences. Next, the compounding application may be filed for offences pertaining to one financial year or quarter, or for multiple years and quarters in question. It doesn't matter, you can do it for one, you can do it for everything put together also. The compounding application filed for multiple years will be referred to as consolidated compounding application. Now people, just for your understanding, when in practical scenarios, when you have multiple offences happening, a person will always file for a compounded consolidated application. It's because once you go for a compounding, people, you are not eligible to go for a compounding once again. You are only permitted to make this offense one because you're promising to the officers that time that you don't want to be convicted, because you'll never make this mistake once again. So if you have offences of the past, it's important that you accumulate all the offences together and then file a consolidated application, because if only one application has been compounded, the balance reasons can still put you in jail, and that becomes a serious issue. Yes, so if you have done a lot of mistakes, then consolidate everything, file one compounding application, clean off all the past history, and then start afresh by going forward and telling that you will never make any mistakes once again. Clear? Great. If there are more than one rejected applications under previous guidelines, then one consolidated application can also be filed. Like I said, if they rejected it earlier, then you can file once again. Whether an applicant can withdraw a compounding application and file a new application. Do you want to withdraw and file a new application? The applicant can file a new single application or a consolidated application after withdrawal of the previous one. So can you do it? The answer is yes. You are permitted to file a new application. However, such new application shall be treated as subsequent application and higher compounding rate shall be applicable, which is later discussed upon. If there were older rules and the old rules gave you a different rate and the current rates gives you a different rate, I will assume that the new rates are applicable. I will ignore the old rates and you will have to go as per the new rates if you want to go for a new application in such terms. Whether an applicant is required to file compounding applications for all the offences together for which prosecution proceedings has been initiated. Do I have to consolidate everything and put it off? No. The applicant may apply for one or multiple offences in an application. His application cannot be rejected on the ground that he has not applied for a particular offence for which notice for prosecution has been issued, which means they're giving you an opportunity. If you want, you can go for all together or you can go for some also. As a normal person, you will obviously like to go for all. You don't want to get prosecuted for other reasons. So consolidated is always the way to go. But yes, I'm leaving the choice in the hands of the assessee. Assessee can decide what and all he wants to go for and compounding for. Everything else he can choose not to go for. Is there any limitation to the number of times a compounding application can be made? No, there is no limitation to the number of times a person can file compounding application. However, the competent authority may reject an application on the grounds of he being an habitual offender. Like I said, once you're filing a compounding application, you're making a promise that you will never go for compounding once again because you're never going to make the offense once again. If you're going to be a person who's habitually making an offense like this, then there is no reason for the officer to come and accept the compounding applications in the future. They can always keep rejecting by saying that you are a habitual offender and there is no reason for me to be compounding this offense once again for you. What is the timeline for filing the application? The compounding application has to be filed suo motu at any time after the offense is committed, irrespective of whether it comes to the notice of the department or not. So you have been given an opportunity to file this whenever you want, whether the proceedings has been initiated or has not been initiated, whether the officer has found it out or the officer has not found it out. If you want to come voluntarily and do it, then you can file it at any point of time. The compounding application can be filed after the launch of prosecution proceedings as well. It doesn't matter. Like I said, it's before or after. As long as you file it, you're good enough to go. Is there any time limit for filing an application for compounding? No, there is no. An application for compounding can be filed any time after the committing of offense, regardless of whether the same has come to the notice or not. So is there any time limits for filing compounding application? No. As long as the final order comes in your hand, which comes and tells that you have to go to jail, you are permitted to go for compounding that point of time. So yes, until the order is passed, any compounding can be done. It doesn't matter. That is your sole discretion. What is the compounding application fees? For compounding applications on the consolidated compounding applications filed on or after 17th October 2024, the applicant has to deposit a non-refundable fees of rupees 25,000 for a single compounding and rupees 50,000 for a consolidated compounding. Yes, that is what is going to happen. That is what is going to happen. So if you have one offense or one particular assessment year or one particular financial year, 25,000 worth of fees. If you're consolidating a lot of offenses to put together and trying to trial it out in a single go, then you have to pay 50,000 rupees as a compounding application. Expect this as an MCQ question. Please expect this as an MCQ question. The said fees is non-refundable but adjusted against applicable total compounding charges decided by the competent authorities. If at some point of time the officer feels that yes, you had to pay 50,000 but you have only paid 25,000, they can always adjust the existing 25,000 against the 50,000. But once the compounding fees is paid, it is always non-refundable. You are not getting this money back. Whether compounding application fees is adjustable against other compounding charges payable, this is what we discuss, people. Yes, you are eligible to adjust this off. There is no issue here, but you are never going to get this refund back no matter what happens. Whether compounding is allowed if the application for such offense was previously rejected. If so, whether supplicant applications need to be filed for more than one compounding application rejected under previous guidelines. How will the compounding application fees be charged? If a compounding has been done and has been rejected, tell me what can be done now is what the question is. Yes, an applicant may apply for compounding of offences through a single consolidated application of the previous ones which has been rejected. However, the fresh application can only be filed if such rejections were on account of a curable defect. This point is coming again and again, people. You can't just like that file and compounding application just because the previous one is rejected. It can only be done if you are having a curable defect, which is something which can be ignored off. Compounding application fees chargeable for a consolidated would be charged in such case, so therefore 50,000 rupees is what you would pay. Payment of all taxes, interest and other sums relating to offences which are compounding sought for. All outstanding taxes, interest, including interest under 220, penalty and any other sum due relating to the offence for all relevant assessment years is to be paid before making the consolidated application. So this is step number 1. If you're planning to go for compounding, you need to mandatory make sure that all the pending dues are settled off before you make the application. If you have any open dues, you are not allowed to file this application. The officer will reject it off on that grounds alone. However, if on verification by the department, any related demand is found outstanding or is considered payable, the same on being intimated to the applicant can be paid within 30 days of the intimation of the department or such period not exceeding 3 months by the competent authorities. The compounding application or the consolidated application, as the case may be, shall be considered valid only upon the consequent of payment of all the demands which are pertaining to the offences. Like I said, step 1, pay the monies which are due and then file an application. If you have missed out something, then the officer will intimate you about it and you will be given 30 more days for you to file that payment. If you do that, then your compounding application is valid. If not, they will reject this case of mandatory. Undertaking by the applicant has to undertake to pay the compounding charges within the stipulating time. This is obvious. Withdrawal of appeals, the applicant has to undertake to withdraw appeals filed by him if any relating to the offence sought to be compounded. In case such an appeal has mixed grounds, one or more which may not be relating to the offence under consideration, an undertaking has to be given for withdrawal of such grounds. One of the rules, people, if you're going for compounding, is that you have to plead guilty. If you're pleading guilty, there is no reason for you to file an appeal. If there is already an appeal which is going on, then you will withdraw the appeal. If the appeal has multiple issues in which one of these issues is what you're pleading guilty for, then you will give an undertaking which will come and clarify that you will tomorrow not go and try for the case on the appellate authorities level. You will go and you will file in withdrawal for that part, or you will not press the grounds before the tax authorities or before the appellate authorities in case you're going for a compounding application. Consolidation of offences. An application for compounding of offences by an applicant for any period for a particular time should cover all the defaults constituting for a TAN of such period. The total default on account of non-payment of TDS shall be considered by combining the details of defaults in all the statements filed. Like I said, if you're going for a TDS return default, then it has to be for a quarter, and in that quarter, whatever are the outstandings, everything has to be paid off. Whatever has been there, everything has to be taken into consideration for the purpose of your consolidating application. Next, revival of a defective application. An application which did not fulfill any of the specific conditions or are not acceptable due to curable defects such as non-payment of outstanding tax, application is not filed with correct performer, application filed for incorrect financial year or assessment years, or they have not the right section, they'll be treated as defective under the guidelines as been given by the income tax department. Like I said, all things have to be done properly before you're filing the application. If not, they'll be treated as defective. However, such applications can be revived without paying off any additional compounding application fees, provided the defects are cured within a period of 1 month from the date of the intimation of the defects. So if you're able to clarify yourself that yes, I've made this mistake, but I'm going to correct this mistake within the next 1 month, you will be permitted to revive this. One thing which I wanted to clarify, and this is something which is very important and tested at CA final level, when you talk about the payment of taxes, if you remember in the payment of taxes, the timeline given was 30 days, whereas here it is given 1 month. That is what the critical part is. Understand this very, very carefully, the difference between 30 days and 1 month. When it comes to 30 days means exactly 30 days. 1 month means you have the time, the whole month. You have the time of whole month. For example, if an intimation comes to you on 1st February, 30 days would mean you will get time till 3rd March, because 28 days is considered in Feb and 28 days is considered in Feb, and 1st March and 2nd March is taken into consideration. So yes, 2nd March or 3rd March, as the case may be, you may look into it. But when it comes to 1 month, people, 1 month would mean you have to complete it by 28th February. You will not be permitted to go beyond March on this. Yes, that is one very, very important thing which you need to keep in mind, and the important difference between someone saying the word 30 days and someone saying the word 1 month. So understand this carefully. Revival of a defective application has a timeline of 1 month, whereas payment of dues which are intimated by the officer has a timeline of 30 days. In case the defect is not cured within the time allowed, then the defective application will be rejected back to the applicant. Any further application for the same purpose will be considered a subsequent application, and an additional charge will be levied for the same. Yes, so if you're going and having a defective application, next time when you file a new application, you cannot come and say I already filed money, no, the 25,000 or 50,000 which I paid earlier, can I adjust it off? No, you will have to pay the new 25,000 and 50,000 in order to file the second application. You will not adjust the previous application money. Next, offences which are compoundable with the approval of higher authorities. The competent authorities in the following cases may compound only with the approval of CBDT. These are some specific cases where you will not be able to get the compounding done from the 4 authorities we discussed. CBDT will have to intervene in order to give you the compoundings. What are the items, people? If in case of an offence for which application has been convicted for an imprisonment of 2 years or more with or without fine by a court of law. So if the application is going for an imprisonment more than 2 years, then you have to get a compounding done by CBDT. In case of an offence which is related to another offence under any other law for which the compounding is 2 years or more. So again, the same thing, whether it is income tax or it's any other law, if the imprisonment is going to be more than 2 years, then you have to go for CBDT approvals. Next, if the applicant, as per the information available based on information collected by the central and state agency, has been found to be involved in any manner in anti-national or terrorist activities. If you have something which is going to impact India's integrity, then you are going for CBDT approvals. Officers cannot come and approve it. In such a case, the competent authorities will consult with the relevant agency and seek inputs regarding the said activity and its implications for the purpose of deciding if it's a deserving case for compounding and incorporate them while seeking approval. So when it is a matter of national security, you will always request CBDT approvals. In case of an applicant being a person other than the main accused, where it is proved that the applicant facilitated tax evasion through mechanisms such as use of entities for laundering of money, generation of bogus invoices for sale of purchase without actual business, by providing accommodation entries, or in any other manner as may be prescribed under section 277A. If you are a party to the contract of the fraud, where you are doing any such things, money laundering, any kind of generation of bogus invoices, or you're booking false entries into your books just to inflate cost or inflate profits, in that case, all those cases will be taken into consideration and you will be required to get an approval only from CBDT for the compounding of offense. Lower authorities do not have the authority on this. If the offense is directly related to Black Money Act, if it is relating to Benami Property Act, in all these cases you will have to get approval only from CBDT, or if it is an offense which is under section 275A or 275B. These are all the cases where you will have to go for an application with CBDT. So this is a theory question for exam. What are the cases where the lower authorities cannot be doing a compounding application for you? Only CBDT can do it. These are the cases for you. What are the cases? We quickly discuss, people. First one, if it is going to be an imprisonment for more than 2 years, whether done by income tax or by any other act. Second, if you're going to be having an issue of national importance, which means if you're going to have an involvement of any kind of anti-national or terrorist activities which are being litigated upon you, then in that case you need CBDT's approval. Third, if you're going to be any person who's going to be taken as a person who's a party to a contract for prevention of money laundering cases, for any kind of bogus invoice entries or any kind of accommodation entries, then you will be tried only by CBDT. Fourth, if it is going to be an offense which is discussed under Black Money Act or any kind of Benami Property Act, if it is going to be any other case of offense of 275A and 275B, then you're only getting approvals from CBDT for the same. So these are all theory questions. Authority competent to compound an offense. The jurisdictional principal, chief commissioner, principal director general, or director general is the competent authorities, like we discussed, except for these cases which are going to CBDT. If the person has committed an offense under 276B or 276BB for non-payment of TDS or TCS in respect of both resident and non-resident cases, collectees, jurisdiction normally lies with more jurisdictional cases. In such a case, the PCCIT, CCIT, PDGIT, DGIT, in whose jurisdiction the compounding application has been filed, will be the competent authorities. So if there are involvement of more than 2 states here, because you have multiple TAN numbers, in that case, whoever you want, you can file the application with. But if you're filing that application with him, he will become the competent authority to trial the case. However, in case the applicant files application in more than one jurisdictional charge, then the competent authority will be the jurisdictional where the quantum of TDS default is the highest. So if you're having multiple cases of defaults and whichever case you're going and filing it, then in that case, I will consolidate it and check it where the total is highest. If the highest is there in Chennai region, then you take the Chennai as the competent authorities. If it is Bangalore, then you take Bangalore. If it is Delhi, you take Delhi. All other applications will be transferred to such competent authorities, which means at any point of time, you will have to only go for trial against one authority. It will not be multiple authorities. In case the applicant filed compounding applications for offences committed under 276, 276BB in respect of 2 or more TANs falling in 2 or more jurisdictions, the jurisdiction whose quantum of TDS is higher will be taken, like I discussed with you. Yes. What is the procedure for compounding? Mark this as important. This can be a theory question. Reporting from assessing officer or assistant or deputy commissioner. To start an compounding application, the first thing which will happen is, on receiving the application, the competent authorities will have to obtain a report from the assistant commissioner or assistant director, the assessing officer or the assistant director or the deputy director. So which means the moment you file an application, the respective authority will send a remand report and will go and ask to the department authorities to come and give me a report on what is the issue here, who has to submit it promptly to the competent authorities through proper channels. Second, time limit to pass the application order if application is not acceptable. In case where the compounding application is not found to be acceptable, then the competent authority shall dispose of such application through a speaking order, which has to be done within 2 months from the end of the month in which the application is made. 2 months from the end of the month in which the application is made. So when you file the application, the officer has to look into it, and the officer has to come and say, yes, we are going forward to the compounding, or no, we are not going forward to the compounding because of so and so reasons. So as to pass a speaking order, the speaking order has to be passed within 2 months from the end of the month. 3. Time limit to pass an application if the order is acceptable. In case where the compounding application is found to be acceptable, then the competent authorities has to intimate the applicant accordingly, along with the compounding charges which are payable and other pending liabilities. Such intimation shall be issued within 2 months from the end of the month of receipt of the application. Same timelines, people. So to accept also is the same timelines, to reject also is the same timelines. There is no issues here. Time limit for paying the compounding charges, like we discussed earlier, the moment it is approved, the compounding charges will have to be paid within what, people? It is within 1 month. 1 month from the end of the month in which the application is received. So pay it within 1 month. If not, you will be treating the application as defective. You're not going forward with it. Extension of timelines. On written request of the applicant for further extensions of timelines, the competent authorities under exceptional scenarios may extend the timelines for another period of 6 months. Extension beyond 6 months and up to 12 months shall not be permissible except with the prior approval in writing of the PCCIT of the region concerned. So which means if it is PCCIT, then he can approve for an extended period of another 6 months as well. So it is becoming 6 months and going up to 12 months. Extension beyond 12 months and up to 24 months will be done only with the prior approval of the chairman of CBDT. CBDT tavara, no one can else do it off. No extension will be allowed after 24 months from the end of the month. Which means, people, if I have to put out a timeline, it is like this. The person to whom you're going, the competent authorities can give you 1 month. If it is going, then you can ask for an application extension for up to 6 months with the same authority. If you want to go up to 12 months, then you have to take an approval from PCCIT on this. And if you want to go, I'm sorry, can I write this here? Yes, let me write this here. If you want to go forward, then you can go and ask CBDT for an approval for an extension timeline of up to 24 months. But can you go beyond 24 months on compounding? No, you have to make the payment within such time. So which means 1 month is given to you as a timeline, people, but you do have time until 24 months if your officers are approving it for you. Rejection of application on non-payment of compounding charges has been discussed. So where compounding charges is not paid within the time limit allowed or extended, the application will be rejected and the prosecution proceeding shall be initiated if not already done so. Yes, so if there is no payment of compounding charges, like I said, if you are not going to complete this timelines of 12 months, 24 months also, and you still don't pay the money, then in that case they will reject the compounding application of you are liable for prosecution. They will put you in jail for it. The complainant shall serve a copy of the prosecution complainant to each accused within 15 days of filing the complaint to allow prompt filing of compounding application, which is fairly obvious. You have given a timeline of 15 days. In all cases where the prosecution proceedings have been instituted, the order of the acceptance or rejection of the application of compounding has to be brought to the notice of the court immediately to prosecution counsel where the said prosecution proceedings are pending before the court. Whether you get the application approved or you get the application rejected, it has to be informed to the respective courts so that the courts can now further make a decision as to whether they need to keep the proceedings in abeyance for prosecution or can they proceed on the prosecution as the case may be. So you have to keep them informed. 15 days is the timeline to give the same. Yes, great. What is the timeline to pass the compounding order? We have already discussed this, people. So the timeline to pass the compounding order will be 1 month from the end of the month of total payment of compounding charges. So within 1 month, close the matter off. That is what the rule is. So within 1 month, either it's getting rejected or within 1 month it's getting approved and you're passing the order as the case may be. In case the proceedings to impose penalty related to an offence sought to be compounded are pending at the time of filing the compounding application, such proceedings should be concluded expeditiously and the demand relating to penalty, if any, should be recovered before issuing the compounding order. Yes, since all payments have to be taken into consideration, if there is any penalty which is pending for this case, you have already pleaded guilty, you are supposed to pay the penalty. So if there is any penalty, then penalty proceedings will be closed first. They will ask you to pay the penalty and then the compounding application will take its charge. Taxpayers, particularly NRIs, avoid opting for compounding due to a misconception that it constitutes an admission of offence which could affect their reporting obligations in various statutory and international forums. To address this misconception and encourage taxpayers to seek compounding, it is directed that the competent authorities has to include the following paragraph in the compounding order. People, compounding is not always treated as a good thing. People normally have this assumption that going for a compounding order when the proceedings have not even been initiated is like you voluntarily accepting that you're making a mistake, and that can become a very serious bad image on your career. And therefore they have been requested that going forward, if compounding has to be encouraged, a specific para will now be included by all the competent authorities. The competent authorities paragraph will read as follows: the compounding order is intended to resolve the offence under section 279(2) of the act and should not be construed as an admission of the offence. So which means there itself now giving you a confirmation saying, I am not telling that you are guilty, I am just accepting your mistake and I'm asking you to pay some money in order to close your case off. That is the only thing which is going to happen. Nothing else is going to be treated or construed from this application order. The timelines for processing the compounding applications by the competent authorities are administrative and should not describe a limitation period. People, these are compounding applications. It is not something where you should have a specified timeline. As long as it takes, it is important because a person's career is on the line. So you definitely don't do it very harshly. You take it time on it. Whether time for payment of compounding offense may be extended beyond 24 months, we have already discussed this. No, it is not being extended beyond 24 months. As per the revised guidelines, the payment period for compounding may be extended up to 24 months only from the end of the month in which the compounding charges were intimated. For pending applications where the payment intimation was made before the issuance of the revised guidelines but not fully paid, how will the period of 24 months be calculated? It says for applications which are pending on 17th October 24, while compounding charges were not fully paid, where timelines have not lapsed, the period of 24 months will commence from the date of issuance of the guidelines, which means it will start from October 2024. So 24 months starts from the revised guidelines. That is what the new rule says. Our extension of payment of guidelines subject to interest and additional charges? No, definitely. No compounding charges because you're going to delay it is going to charge you interest or penalty because this is something which you're extending because of personal reasons or because of a genuine hardship. Yes. So in that case, you don't need to pay anything extra on this. For the purpose of computation of compounding charges, the word tax means tax including surcharge and cess by whatever name called as applicable. However, interest shall not be included in the works tax to be considered as compounding charges. Yes, so all pending payments is what is to be considered for the purpose of the computation. The compounding charges for the first compounding application or consolidated application by a person has to be computed for each offence disclosed in the application. Further, any application filed subsequent to the first application shall be counted as second, third, and the fourth compounding application or confounding application as the case may be. Like I said, people, the moment you file one application, it is treated as the first application. Whether it gets approved or rejected, it doesn't matter. The subsequent application will be treated as a new application whatsoever. Furthermore, if a person applied for compounding for an offence, the type of which was applied earlier, then the compounding charges for the subsequent offence will be 1.2 times, 1.4 times, 1.6 times, and so on of the compounding charges of the second, third, and fourth offence. Yes, this is the next practical question which can be tested in exams. If they come and say that the first time you have paid 1 crore, second offense you'll have to pay 1.2 times of this, third time you'll have to pay 1.4 times of it, and the fourth time you'll have to pay 1.6 times of it. This looks like a GP. Yes, so 1.2, 1.4, 1.6, it keeps increasing. 1.8 and 1.2 is what you will reach next. Sorry, 2.2 is what you will reach next. If a subsequent application includes any offense, the type of which has not been disclosed in any of the earlier applications, the compounding charges for the said offense will be computed only as per the charges given before. So if it's not the same offense which is being repeated again, then you'll start the process again, which means first time it will be 1 and then it will be 1.2 and so on forward. It is only for the repeated offense of the same nature that you have this compounding effect on it. Where the compounding application has been filed in accordance with prior guidelines and either pending or rejected or has been compounded, and all such applications filed prior to the issuance of this guideline should together be called as the first compounding application. Because these guidelines are only coming from October, anything done before October will not be considered as a subsequent offense. All will be consolidated together, will be called as one application. After this, if you do make a second application, that will be called as a second application. Fairly simple, straightforward things. If the application is made beyond 12 months from the end of the month in which the prosecution complaint is filed, the compounding charges will be increased by 50% of the amount calculated. This is the next thing to be kept in mind. Yes, if you're going to file the compounding application after 12 months, then an additional levy of 50% will be charged on you because you've delayed that compounding application, as the case may be. Which means if you're filing it before or within 12 months of the compounding filing of the prosecution filing, then there is only just the limited charges. But if it's going to be after 12 months, then you'll have to pay additional 50% tax to claim this off. I think all these questions are coming from the table only, so there's no problem. Look at an illustration, people. See if you understand the illustration. We can take the understanding from here. An applicant has filed different applications on different dates to compound different offences will be considered as follows. So you have different compoundings happening. Case number 1 is an application date of 15th January 21. Now, people, this is before October guidelines, so keep that in mind. Compounded offences under 276B. I don't have any subsequent applications. Offence included in earlier application, rate will not apply. So leave it off. 22 compounded 276C, again sequence of application not covered, so reject it off. 2023 something got rejected for you, keep that in mind. 24 this is pending. This is pending. Now, because this is pending and this is September, people, it is before October, this will be treated as the first application for you. So we'll treat this as a first application for your compounding offense because you'll take it forward to the October application. Fact is that it is pending. It is pending, so you treat it at normal rates. If an application is made on 1st November, a single application for an earlier application which was rejected under 276B. Now, people, this is on 276B, so this looks like a first application. This looks like a second application because anyway something got rejected earlier. Because it got rejected earlier, people, you will treat this as a second application. Yes, application dated 2021 and 2023 are together considered as one application. So this is now going to be considered the second application and therefore it is levied for 1.2 times. Next, if you have an application on December 24, which is after October, you have a consolidated application under 276B. We have already treated this one as second application, so this one becomes the third application, and third application means it is 1.4% of the normal rates. Yes, but you have also made an application for 276C. Now, if you notice 276C, we have already done 276C earlier here. So there is already one application done earlier that is going to be called as the first application, and therefore this becomes the second application. Because of that, it is going to be called as 1.2 times. Third thing is I have something called 275A. Notice 275A not there earlier, therefore this becomes the first application, and therefore will be taxable at the normal rates. Very simple, straightforward. Yes. An assessee has made a TDS default of 10 lakh rupees for 3 months during 1920. The prosecution was launched on 2022 under 276B. Normal compounding charges is 45,000 rupees. Facts given to you. Scenario number 1, no earlier applications filed. Case 1 is on 2022. This is October 22, which is before 24 October. Less than 12 months as time lapse. Normal compounding charges will apply. First offense. Second, 31st October 24, filed under revised guidelines. Now this is happening on 31st October, people, which is after the guidelines increase, and it is more than 12 months because it is after 2022. 2022, this is the second application which is filed, and therefore will be increased by another 50% of the compounding charges. Next, if it's a scenario number 2 where the first application got rejected, revised and application filed, first one got rejected in 2022, then in that case nothing can be done. Second application in 2024, even though this got rejected, people, it is treated as the first application, so this becomes a second application. You will have to pay 1.2 times on this. You'll have to pay 1.2 times on this, and therefore you will have to pay 1.2 times plus the additional 50% because it is after 12 months. It is after 12 months, and therefore the charge becomes 81,000, which is nothing but 1.5 increasing the 50%, 1.2 for the second offense, and then 45,000 rupees for the normal compounding charges. Yes, please keep these tables in mind, people. These are very, very good tables which can come for your MCQ questions. Please mark this as important. You have something called co-accused and abettor, 278B. This one is for 278B and 278C, where an offence has been committed by a company or an HUF under section 278B or 278C. The application will be filed separately or co-jointly by the main accused, the company, HUF, or any of the persons who are deemed guilty of the offence. People, these sections of prosecution were discussed in the classes also, where we had confirmed that when it's a artificial entity which is getting prosecuted, it is artificial entity also which is liable for it, but it's also the persons inside it which are also liable. So someone will have to plead guilty from a natural person perspective also to take the case. In that case, compounding will be filed by both of them. In case of an offence by a company or an HUF, the main accused or the co-accused may apply separately or co-jointly. You can do it separately also, you can do it together also. In the payment of compounding charges for the offence by any one of them separately or co-jointly, the competent authority shall compound the offence of the main accused as well as the co-accused via an order under section 279(2). Whether you do it together or separately, it doesn't matter. In case of a liability of an offence for an offence committed prior to the commencement of the corporate insolvency and resolution process, which ceases to exist under IBC, the prosecution proceedings under the co-accused can still continue. In such a case, the compounding application and the payment of compounding charges will be made by the co-accused or the main accused company. Yes, so in case something is getting rejected, in case the liability of the company is getting committed prior to the commencement of IBC related things, then in that case they can ask the natural person to continue with this. In this, the natural person can either pay the money or the main company can also pay the money. It doesn't matter, someone has to pay the money. Yes, that is what the rules are. What else is left? Yes, so this is the compounding application, people. Please mark this whole topic as very, very important. Some important things which are possibly required to be tested for exams. One is the timelines to pass the application order. What happens in case the application was already filed and this becomes the second application? How do you have to settle your compounding charges payments by the 1.2, 1.4, 1.6? What happens if the delay is more than 12 months and therefore you have to pay 50%? What are the timelines of 1 month, 30 days in order to make your compounding payments, in order to make your application approval, application rejection? All those are very important for you to keep in mind. Very, very good questions can be coming from compounding. Expect at least one 4-mark question for your examination purposes. Yes, apart from this, people, I think the chapters are going to be very easy. The ones which are after that as an amendment, one is your liaison office. The non-resident taxation, the liaison office has been brought inside. Liaison office amendment is here. Yes, the liaison office amendment is here, which comes and clarifies that when it comes to liaison office, there was no prescribed timelines as to when the form 49C has to be filed. This notification now comes and clarifies that when a form 49C has to be filed, the form 49C has to be filed within 8 months from the end of such financial year. Yes, so which means if I'm having a financial year of 31st March, then I will take another 8 months, which means by 30th November, I need to file this application off. If you want to remember this properly, the application timeline will be the same timeline as when you will file the income tax return for all transfer pricing cases. Because liaison office is also like transfer pricing model, you will have the application filing date as 30th November, same as what your transfer pricing return filing due dates are. The next amendment, people, is on the cruise ship model. As you all remember, current year there was a presumptive taxation of cruise ships which was introduced for 20%, and CBDT had come and confirmed that we will give you additional guidelines on how a cruise ship should be operating, and therefore these additional guidelines have been given to you. 44 BBC now comes and says if you want to be an eligible cruise ship for the purpose of the presumptive taxation, 4 conditions additionally will have to be satisfied by you. Condition number 1, the operating passenger ship should have a capacity of more than 200 passengers or should have a length of 75 meters or more for the purpose of any leisure and recreational purposes, and should have an appropriate dining and cabin facilities for passengers. So you need to have either a person capacity of more than 200 or your length of the cruise ship should be more than 75 meters. You should have a dining facility and a cabin facility for all your passengers. It should be for a leisure purposes or a recreational purposes. Second, the operating such ship or a scheduled voyage of shore exclusion touching at least 2 seaports of India or at the same seaport of the India twice. It should at least touch 2 ports of India or it should touch the same port twice. So it should go from Visakhapatnam to something else and then come back to Visakhapatnam. The moment it touches Visakhapatnam twice, it becomes eligible. If not, then it is not eligible. Third, it should operate such ship primarily for the purpose of carrying passengers and not for carrying cargo. If it is going to carry cargo, then it is the earlier presumptive taxation. It is not for this. This one is for the purpose of only carrying passengers. Next, operating such ship as the procedures and guidelines as may be issued by the Ministry of Tourism or Ministry of Shipping, that has not been notified for your syllabus and therefore it doesn't matter. So 3 conditions for you to satisfy people. You should have a passenger capacity more than 200, length should be more than 75, having dining facility, cabin facility, recreational facilities. You should be touching the Indian ports at least twice. You should only be carrying passengers, you should not be carrying goods. 3 conditions for you to satisfy for you to have an operation of cruise ships. Yes, liaison office we discussed, it is 30th November as the case. Then you have transfer pricing people, and this is the one thing which I want you to pay attention to. For those who have gone through classes would know that when it comes to transfer pricing, there was this very important topic called as safe harbor rules. However, unfortunately for the last 6 years, this has never been tested for your ICA exams. The reason being that whenever it was a November attempt, normally safe harbor rules will be notified after May. Because safe harbor rules were always being notified after May, it was never an opportunity for ICA to come and test it because it would not fall within the 6 months bracket. This time, for the first time, because we are going for Jan attempt, unfortunately for Jan attempt, the whole safe harbor rules has been notified. But even before Jan attempt, for September attempt alone, one additional safe harbor rules has been notified, which you need to keep in mind. So which means for September attempt, you don't have the complete plethora of safe harbor rules, but you have one specific line item which has to be discussed upon. And therefore, an MCQ question is possible from the safe harbor rules. Let me give you a background on safe harbor rules before we understand this topic. Normally in transfer pricing, what happens people is that you normally will prepare a local file where you will come and tell that this is the margins which I'm doing, and you will generally do a search with the third parties. With the search party of third party search and a third party comparable search or an internal whatever it is you have done in transfer pricing method, a possibility is that the transfer pricing officer may not agree to your position because he may come and say the third party search which you have done is not great, and he may check a certain set of comparables. To avoid all these complications, a new system was introduced in transfer pricing system which was called as safe harbor rules. Safe harbor rules is where income tax department would voluntarily come forward and come and tell, for these line of services, this is the margin which I expect out of you. If you are ready to accept those margins, if you're ready to at least give them this level of margins, income tax department will ask you to file an application before them, and in that application, if you promise them that I'm only going to do this much level, I'm going to do at least this margin, a little bit more than that, you should never come and question me. Department will consent along with you and will never come and question you on those transfer pricing policies. The only challenge will happen if you start reporting less than that. The moment you start reporting less than that, they will pick you up for scrutiny and you'll have to justify as to why you're doing less than that. So safe harbor rules is like a guideline. It's the benchmark which has been set by income tax department. If you achieve the benchmark, you will not be scrutinized. You will be told that you are a compliant assessee. The moment you go below the benchmark, you will have to justify yourself. Now, is safe harbor rules for everyone? Answer is no. Safe harbor rules can be chosen by you. It's not like just because income tax department has set a benchmark, everyone has to adhere to it. No. When the market conditions are not good, you can always rely on the market conditions and go for a lower rate also. Safe harbor rules is for those people who voluntarily want to go and apply for it, make an application to the officer and come and say, I will adhere to your benchmarks and you will not treat me as a defaulter. That is something which can be done in safe harbor rules. So which means it is an optional scheme given to many assessees. That is the background. If you understood the background, let's understand this carefully. Safe harbor rules has been determined in respect of incomes referred in section 9.1. So 9.1 people was an extra amendment which was introduced where they had come and told earlier safe harbor rules was only for deciding on the transfer pricing model. Now safe harbor rules is also there for deciding income deemed to accrue or rise in India. Accordingly, CBDT is notified safe harbor rules for section 92 CB where they have come and provided safe harbor rules for the purpose of 9.1 which is chargeable under the head PGBP. The definitions are coming and telling who are the people who are eligible for safe harbor rules as per this amendment. Eligible assessee will be a foreign company which is engaged in the business of diamond mining and has exercised the option of safe harbor rules. So this safe harbor rules has been introduced for foreign companies reporting diamond mining as a business. The business will be to sell raw diamonds in any special notified zones. Any special notified zones as may be covered under section 1. The Safe harbor rules come and say the aggregate should be the amount paid or payable to the eligible assessee or to any person on his behalf on account of sale of such raw diamonds by such eligible assessee. So if they're going to have two people involved, foreign company, and if they're going to transact with each other, whatever is the price which is being received on that, that is called as an eligible income. The income will also receive any amount received or deemed to be received by the eligible assessee or by any person on his behalf on account of such raw of sale diamond by such eligible assessee. So whether you call it payment, you call it receipt, it doesn't matter. They have to take both. You have to take both. The relevant previous year will be the relevant previous year in which the person is opting for the safe harbor rules. Raw diamonds are basically those diamonds which are uncut, unpolished, unassorted, not really important people. Definitions are given to you. What is the safe harbor rules? Safe harbor rules are here. If an eligible assessee has declared income from an eligible business in accordance with the circumstances as specified in safe harbor rules, the option for safe harbor rules exercised by the assessee in any previous year shall be accepted by the income tax authorities unless such safe harbor rules has been declared invalid. So the moment I have reported that I want to go for safe harbor, the officer has to accept it. Notice it's a mandate by the officer because I have requested for it. You have to mandatory do it. The circumstances in which the respective eligible business is taken, the profits and the gains of the eligible business under the head PGBP shall be 4% or more of the gross receipts of the business. So taking your gross receipts, if you're ready to report at least 4% of that as your PGBP income, I will not question you anymore. I will not question you anymore. If you're going to report less than 4 is what I have a problem with. If you're ready to report at least 4% of your gross receipts, basically your turnover as the PGBP income, I will not question you anymore. If you notice this carefully, this looks like presumptive taxation. Yes, it looks like presumptive taxation, but yes, this is transfer pricing specific because we're looking at foreign companies having a different scheme of model. Where the eligible assessee has exercised the option of safe harbor rules, in that case, and this person will be treated, the option will not be treated as declared, and such option is not declared invalid, any deduction allowable under section 30 to 38 shall be deemed to have been given full effect to. Same as presumptive, the moment you're going for presumptive, all effects are given to, and no further reduction under those sections will be allowed. The written down value of the assets will be treated as already given effect to, and therefore depreciation will be taken accordingly. No set off of unabsorbed depreciation will be allowed for you on these incomes, but notice this carefully, they also say no carry forward of losses can also be done. So which means here is a case where business losses have also been denied to you. Normally in presumptive taxation, which happens, people, for presumptive taxation of 44AD and 44AD and all, you can set off your prior losses, but here is a case where you cannot set off prior losses also. That has also been denied to you. No set off of losses of other business incomes or other heads will also be allowed as assessee, like I said. So no deduction happening. Take your PGBP, 4% of it is what I want you to report for safe harbor purposes. The provisions of section 92D relating to maintenance, keeping of books of accounts and everything shall apply if the eligible assessee enters into such transaction while carrying on eligible business. You will have to get a transfer pricing report done, maintain your books of accounts, and everything has to be done properly as per the same transfer pricing policies. For you to do the safe harbor rules, what are you have to do? First of all, you have to furnish a form called as Form 3CEFC. The assessee has to furnish a Form 3CEFC, complete in all respects to the assessing officer on or before the due date of filing the return of income under section 139 for exercising the safe harbor rules. So file this form along with the return, inform them that I want to go for safe harbor rules. I'm ready to report at least 4% of my turnover as my income of PGBP, and you should let me go. Yes, if the assessee does not exercise the option for safe harbor, the income from eligible business shall be determined in accordance with the provisions of the Act. If you're not able to do it, then I do it as per normal provisions, no problems. Circumstances where the option exercise can be declared as invalid, the assessing officer can declare the safe harbor rules option as an invalid by an order in writing if they have come and confirmed that the assessee has availed the safe harbor rules by furnishing incorrect facts. He has not given me all the facts, he is reporting misfacts, and therefore I will not be giving this safe harbor rules. I will then deny the safe harbor policy. Second, the person has concealed any facts relating to his business. He is not concealing, he is not giving you the complete details, people. He may probably not be reporting all the turnover. There may be some under reporting of incomes and everything. In that case, I will declare the whole option as invalid. The moment it has to happen, the assessing always, like I said, will have to give you an opportunity of being heard before you put your case forward. So an opportunity of being heard will be given to you, an order will be passed accordingly. If the case is found invalid, then I'll go with the normal scheme. That is what would happen. The order by the assessing officer by declaring this option will be treated as invalid. Mutual agreement, the assessee is not entitled to invoke mutual agreement procedure. So MAP has been denied to you, people, the moment you go for this, or if the assessee has exercised the option of safe harbor rules under section 10 IB in respect of such business, an option is not declared invalid. So I will not be allowed for MAP rules and all. MAP rules is generally for you to go even further. If I don't want to go further even further and I'm ready for taking 4%, then why do you need a MAP procedure on this? You will not be allowed for MAP procedure. Very simple, straightforward case. Yes. The last thing I believe, people, is your section 94B. So we're looking at this very, very quickly. The 94B provisions. Conditions and activities notified for finance companies to qualify for the exclusion of applicability of section 94B. 94B, as you know, is thin capitalization. If I have any kind of interest which is coming from AE exceeding 30% of the EBITDA, I will have to disallow that interest. That provisions has been discussed with you on this. Here they have come and said a finance company located in IFSC has been excluded from the applicability of these provisions. A finance company is defined as a finance company as per IFSC authority rules. Finance company has been defined as an financial institution separately incorporated to deal with one or more of the permissible activities. Activities being, it does not accept any public deposit from residents and non-resident as defined. It is not registered with authority as the banking unit. It should not be doing any public deposits, should not be registered as a banking unit. CBDT via this notification has given additional conditions for you people. The additional conditions is coming and saying the IFSC should carry it out only on the following activities. They should be doing lending in the form of loans, commitments and guarantees, credit enhancement, securitization and finance lease. They should be doing factoring and forfeiting of receivables. They should be doing the functions of global or regional corporate treasury centers such as borrowing, lending, hedging of currency or commodity risk or investments, cash management, structured credit, intra-group financing, financial budgeting and other similar treasury services and activities. The interest being paid by such finance company being the borrower in respect of debt issued by the non-resident shall be in foreign currency. If you satisfy these conditions, you will not be required for 94B. No thin capitalization rules will apply to you. Yes, awesome. Now I'm going to quickly summarize what are the critical things which you need to keep in mind, people. TDS provisions, I would say you can ignore it off. As long as you see an IFSC center coming up in the question, you can come and say no TDS is applicable. Similar logic applies for 94B. If you see IFSC centers, please say it is not applicable. Two things which are critically to be kept in mind from exam perspective is one on the license office. If you have a license office, in that case, 40% of that in case of license office, you have a due date of 8 months from the end of the financial year in order to file a form 49C. So 30th November becomes your due date. Second, when it comes to safe harbor rules, the condition is that you have to at least report 4% of your turnover. If you are a foreign company engaged in mining of raw diamonds, you report 4%, opt for safe harbor rules. I will permit you to go forward. If not, I will continue with the normal discussions. The moment you're reporting 4%, it is like presumptive taxation. No other expenses, no other deductions, no other losses, including for business losses, will be allowed as deduction to you. So you have to report that as a case. The critical and the most important thing for this amendments is your compounding applications. Compounding applications, critical pieces is about when you can approve a compounding application, when you can reject a compounding application. If you're going for compounding charges, how will the charges inflate itself when you're going for second and subsequent applications? And if you're delaying more than 12 months, then you have to pay 50% extra on this. These are some compounding applications. What are the timelines which you have in order to pay your compounding charges, starting from 1 month to 6 months to 12 months to 24 months? That has to be kept in mind. If you're going to have revised guidelines, in the revised guidelines say what are the cases where you have to go and approach only CBDT for compounding applications is something to be kept in mind. These are some very critical things which you need to keep in mind for the purpose of your compounding application. Please do expect a question from exam on the compounding piece. A 4-mark question, you should be able to easily grab off on that, people. So please pay attention to that. Yes, that's all for the statutory updates. That is all you have to keep in mind for your exams, other than what you have been discussing till now. I know these things can become a little heavy and daunting for you, but it also is a good sign for you to know that yes, you already have a guaranteed question for your exams from this statutory updates. So why not pay a little more attention to this? Yes, awesome. If you're convinced on that, people, I will be coming back with another video discussing with you on something called as a judicial updates. We have some case laws coming in for September exams as well, so I'll be bringing in the judicial updates for you for that, so that you can focus on that, and that's one other short 4-mark question for your exam. So we'll be discussing on that as well, so that you can cover that for your exams. Until such time, please continue reading. Have a great time enjoying your exam leaves and preparing for your CA final. I hope you're having a great learning at this stage. Please do not give up your journey, people. This is the one opportunity you'll get to qualify CA final very beautifully and become a deserving chartered accountant. So yes, we are in the final leg. Push hard and get it done. That is what I would request on. I will see you all in the next video. Until then, take care. Bye bye. Signing off.